Okay, we're at the top of the hour, so we'll go ahead and get started. Welcome everyone to our presentation on optimizing SOX compliance. So I'm Kevin Shives. I'm a partner here at Sensiba. I've been in this position for almost 8 years, and one of my most important responsibilities here is to enable teams to provide a flexible, effective, and efficient SOX service solution for our clients. I'm informed in this practice by almost 30 years of experience, including 20 of those years helping dozens of companies implement SOX and to maintain compliance year after year. Some other relevant experience. In the middle of my career, I stepped out of professional services and worked as a controller in a public high-tech company in the Valley. So I've been on both sides of the compliance equation. Joining me on the panel today is James Taylor and Sarah Gitter. I'll let each of them introduce themselves, and we'll start with James.
Yeah, thanks, Kevin. Good morning. I serve as Sensiba's internal audit and SOX leader. I've been with the firm for about 3 years. I started with PwC back in 2004. That's where SOX became part of the business landscape. And during my time there, about 6 years, I assisted with SOX implementations and first-year efforts, in addition to typical recurring SOX efforts. Also led internal audits that were financial, IT, and operational in nature. Now, since my time with PwC, each role, whether in professional services or industry, each were focused on process improvement, risk management, and of course, SOX compliance. And they were primarily in the tech, consumer products, and manufacturing spaces. So my comfort zone where I like to be is collaborating with management teams to develop best fit process improvement and risk management solutions. And with that, I'll turn it over to Sarah.
Thanks, James. Good morning, everyone. I'm Sarah Gitter, a senior internal auditor here at Sensiba. To give you a little context about myself, I began my career in public accounting and have been an internal auditor for over 10 years. I've had the privilege of working across various industries, including technology, manufacturing, and distribution, which has allowed me to gain an understanding of the challenges and opportunities each sector brings. I enjoy collaborating with clients and assisting them with enhancing internal controls, risk management, and overall governance within their companies.
Thank you, Sarah. Let's take a look at the agenda. We have a fairly focused webinar today as we're targeting approximately 30 minutes. Here's what we'll be covering. First, I'm going to provide a brief overview of Sensiba and our consulting group. Then we'll do a quick refresher on SOX, kind of a where we are now discussion. I'll follow that by a deeper dive on what I call the SOX optimization equation, and then the usual wrap up at the end. So our firm, Sensiba is headquartered in Pleasanton, California. We also have other physical locations around the state and in Oregon. We've been in business for close to 50 years and service clients throughout the US and beyond. We're a B Corp, and I believe we're among the first accounting firms to obtain this designation. If you're not familiar with what a B Corp is, I'd encourage you to check it out on our website, where you can see how we're working to balance profits with purpose and sustainability. Also, as indicated in the boxes across the page here, we provide all the services you would expect from a full service accounting and advisory firm. Let's drill down a little bit on the consulting practice itself. Now, as you can see, our service offerings are on the left side of the screen, starting with technology. Here we help our clients find their way to their best fit system stack. And then in the bottom right-hand corner, you can see some of the primary software publishers that we are currently working with. Next on our offerings, you'll see internal audit and SOX. Of course, that's going to be our focus today and of our discussion. Next, you have outsourced accounting, and then family office, where we provide outsourcing and also advisory. So moving on to the kind of the SOX refresher. We all remember Enron, WorldCom, Global Crossing, Tyco, Arthur Andersen. Has it really been 20 years since all those disasters happened? Well, it actually has. And how have things all played out? The law was passed in 2002. Companies started reporting in 2003. And I can recall back at the beginning that the cost of non-compliance was a real concern for your CEO and CFOs. They were a little bit scared of this whole thing because they didn't want to accidentally end up with a large fine or being prosecuted for jail time. But what really happened? I'm not sure anybody has actually been prosecuted directly under the law. The reality is that there are so many other SEC provisions that are easier to prosecute long before you get to the SOX requirement. But the way this has really played out is I think we have seen an improvement to financial reporting. There's certainly continues to be a lot of discussion about whether the cost benefit of that improvement is actually there. But while nobody's really afraid of SOX in the way that they were in the beginning, the requirement persists. And I think it's embarrassment that really, management audit committees are really looking out for. They don't want the embarrassment of having a material weakness on their financial statements and all the cost that inevitably goes along with that. And the SOX requirement itself has softened over the years, whether you're in or out of the requirement, as the SEC has tweaked the rules. And I'm going to turn the next slide over to Sarah, and she's going to talk about some of that.
Thanks, Kevin. So if you're a public company publishing financial statements, the CEO and CFO are always required to sign off on the 302 certification each filing. Section 302 holds the CEO and CFO personally accountable for the completeness and accuracy of the financial statements. And in order for them to get comfortable with the financials and affirm that there are no misstatements or omissions, management is required to go through the 404A process. So Section 404A places a strong emphasis on internal controls. The responsibility for compliance falls on company management, which requires them to always assess the design and effectiveness of their internal controls and report on whether their controls are operating effectively or not within their annual report. So while 404A emphasizes management's responsibility for assessing internal controls, 404B adds an additional layer of assurance through the external auditor's independent examination and attestation. This is where having the experience with 404A is a plus because it gives management an advantage, as they have already gone through the process of conducting their own assessment of internal controls before the external auditors come in to issue their opinion. Next, James will discuss the thresholds that determine whether a company falls under 404A or B.
Yeah, and what we're showing here is a summary I like to use in discussion with client teams to identify where their company is at. As it relates to whether they'll be required to be compliant based on 404A or B requirements, this represents the current measurement data from the SEC. It's a good graphic for planning purposes. Your company's date of determination, the date where you'll need to measure and identify, if you'll be required to be 404B compliant, it's going to be the last day of your company's second quarter. In fact, I actually had a client this year that had to watch their stock price to determine whether or not they would pass beyond that $700 million public float. So it is something to pay attention to, certainly in the beginning. After that, I think it's more automatic. The key takeaway here is, to ensure you understand where your company is at in relation to these thresholds and to prepare accordingly. As Sarah mentioned, if you're below that threshold where 404B requirements are triggered, you can be in a position to limit the compliance efforts, where an integrated audit would be required by your external auditor and where management would have more discretion on the nature and extent of testing. And next, we're going to go and talk through optimizing your SOX program.
Yes, thank you, James. So this is where I was mentioning earlier about the SOX optimization equation. And you can see an equation at the top here. So optimization equals effectiveness and efficiency. So when we're talking effectiveness here, what we're really looking for is that clean opinion on our internal controls. No material weaknesses, nothing that needs to be reported outside of the company. And then when we look at efficiency, we measure that in dollars and of course in pain. Even if you've got money to throw at your compliance, everybody knows that late nights and more work than you were expected is equal to pain, and we want to avoid both of those things actually, or at least minimize them. So on the left side of this wheel here, I'm going to be focused on the effectiveness points, and then on the right side, more the efficiency, and obviously you'll see how these all interrelate. I often get questions from management and audit committee members. They'll give me a scenario. They'll say, hey, I've got a company headquartered in San Francisco. It's a software company. They've got about 1,500 employees. They're on NetSuite. They're located in 4 different countries. How many internal controls, SOX key controls, do you think we would need for that? And the answer is, it sounds a little flippant, but it is to the point. You need all the controls you need. And how do you know how many you need? Well, you have to go through a process known as a risk assessment so that you can identify all your risk and then map the various controls that help you to minimize and control those risks. So I really can't tell you until I do that. I could give you some averages, but they would be pretty meaningless because it really depends on your particular company's situation. And then on the efficiency side, just continuing with the number of control theme, you've got the same thing. For efficiency, how many controls do you need? All you need, but I'll add no more. The reason for that is every control has a cost to it. You know, it has to be designed, has to be documented, it has to be eventually tested, evaluated, and reported on. And not only that, that's just the evaluation side of SOX, but somebody actually has to perform it. So you can see there's clearly a lot of cost with that. So getting that, understanding your risk and making sure you have the correct number of controls is key to both effectiveness and efficiency. And what about the management and the audit committee? Well, what we need most of all from this side is really the appropriate tone at the top. If management understands key risk and shows how important that internal controls are, then the rest of the company will generally follow along. And how do they show that they believe in this and that they understand all this? They allocate the appropriate resources for both the controls themselves and the evaluation process that must ensue. And that's true for management and the audit committee. And then there's this idea of maximize external auditor reliance. Now we're getting to the efficiency, right? So as I stated earlier, every control you have has a cost, right? So it's got to be tested and evaluated. And if you're under 404B, like Sarah and James were talking about earlier, that means your external auditors have to sign off on the internal controls. They have to give an opinion. And obviously, you want a good opinion. But in order for them to do that, they either have to rely on the testing work that management has done and all the other documentation that management's done, or they've got to go in and test it themselves. Now, you'll never get 100% reliance, but the idea is to understand where the auditors are on their reliance percentages, what they're kind of targeting, and make sure that you are getting the maximum out of that. This not only reduces cost for each individual controls on the evaluation side, but it also reduces the pain for the process owners because they're not having the same thing tested twice, once by management and once by the auditors. And speaking of process owners, what do we really need from process owners to be effective? Well, and efficient for that matter, is that they have to have training, right? You don't just wake up out and come out of accounting school and understand, how to do SOX and what the importance of that is. Everybody needs to be on the same page. They also need to understand that SOX is an open book test, right? Here's your controls. And here's the way you need to approach them, document them. And if you do all that and you integrate that into your daily activities, process owners are going to have a much easier time and you're going to get a much better result. And then we hear a lot about increased automation. Now, we all know AI is going to take away all of our detailed work. I don't see it yet. So, there's probably some intermediate steps that we need to take. And what I'm getting to there is you can automate your evaluation process to some extent, and you should always try and do that. But you also need to increase the automation in your accounting activities and reporting process. And I'll talk about that a little bit more in depth in a later slide here. And then finally, and I'm going to go ahead and bring both sides to bear here. The reason is because they're exactly the same. For effectiveness, you need to have a SOX project management office. Depending on the size and scope of your company, that might be one person. It might also be one person who's using a combination of internal and external resources. But the key takeaway here is that you have to have someone in your company who is qualified, has the resources and focus to keep your SOX project on point year after year and all throughout the year. This thing can really run off the rails quickly, and you will not get the results that you want. If you keep all of these things in mind on both sides of this, effectiveness and efficiency, you have a really good chance of getting to that, what we call SOX optimized. I said I was going to drill down a little bit more on the automation opportunity here. And what I see in companies is there is usually a lot of emphasis on, certainly companies we work with, that you need to do the evaluation part of SOX more efficiently so that it costs less. And we totally get that. And we work very hard to be as efficient as possible in that process. But I believe, and I have seen that the more that you can actually automate and improve the underlying accounting processes, especially around the close, those have the biggest bang for the buck on the improving your efficiency around SOX and your effectiveness as well. So I've got a little statement here. 78% approximately of all the information needed for SOX is produced in the accounting close. Now, I didn't pull that from Accounting Today or any other periodical. As you can see in the bottom site there, it's actually from my own experience, right? Of working with over 40 companies and at least 100 SOX cycles during that time. This is reality. This is where the data that we need, that you need, or anybody else needs to go through a SOX evaluation process. It lives in the close. James?
Yeah, thanks, Kevin. And here's a graphic of those close activities, that 78% that Kevin just mentioned. There's typically a list of significant or critical activities that happen at month end, and that's what's going to drive your close cycle. Closing activities, including journal entries, analyses, and reconciliations are performed in preparation for financial reporting. If your team is working through more manual activities, leveraging less on your ERP system, they'll be working harder than they need to. And this includes maintaining email approvals, electronic files, everything you see in that box in the upper right-hand corner. In addition, evidence of approval, the final piece, the crown to ensure you and your team gets credit for performing the control, may also need to be tracked and retained. What's more, we're going to double down. When it comes time to assess the effectiveness of your controls, your auditor, that's me up there, represented by the B, will also need to work harder, because we're going to have to spend time navigating files in our network, probably getting some read-only access, searching through emails if need be, providing additional manual write-ups in our test sheets, and then working through any potential issues that often arise with missing evidence or evidence that doesn't quite cut it in terms of meeting SOX requirements. This adds to the level of effort to completing SOX testing. And the point here is that manual processes and documentation and testing are more expensive and typically have higher rates of deficiencies. And where we see more automation, we also see fewer deficiencies and smoother, more efficient testing with less work and cost to companies. Speaking of automation, Kevin's going to talk us through a little bit more about that.
So what does it look like, right? When you endeavor to automate your close? Well, you're going to choose an automation platform, right? That's the way it's typically done now. And here are some of the features and functions and attributes that you want to see in that platform in order to reach the goal we're talking about. For one thing, it needs to be ERP agnostic. In other words, it needs to be able to integrate your trial balance no matter what your GL is. It needs to provide a dynamic and transparent workflow for all your close activities. You're no longer keeping your close on an Excel spreadsheet like I used to do, and then calling all these meetings during the close and trading emails to find out what the status is. You can look into your platform that you've chosen and see that at any time. It also should promote standardized reconciliations. We all love spreadsheets. I love spreadsheets, but let's don't kid ourselves. They do contain errors sometimes, and they can get us in trouble. So the more that we standardize things, the better off we're going to be. Provide a centralized workspace, a single source of truth. That gets back to what James was showing on the graphic, right? How many different places does somebody need to go to find the data that we need to evaluate the validity of a particular process that occurred? Somebody prepared something, somebody reviewed something, and here's all the data for it. If to the extent that we can go to a central place and have all of that systematically, asserted and certified, the easier it's going to be. Which brings me to the final point. It needs to allow read-only access for your SOX testers, your external auditors, and anybody else that obviously that you would want to authorize who would have an interest here. But those are the primaries, your SOX testers and your external auditors, and have it in such a way where they can easily and directly, pull that completed data. Now, it's not like they can just do that anytime. You want a system that you can limit, or better yet, you can determine when that data is available for that read-only access. Now, not surprisingly, we have a favorite here. We like BlackLine. We're a full service provider of the BlackLine platform, and we've seen a lot of the things that we've been talking about around efficiency by people adopting this particular software. I'm not going to go into any more great detail here, but if that interests you and you want to see how this can really make a difference, just reach out to us and we'll walk you through the evaluation process to see if it's right for you. So just to summarize our offerings from Sensiba around SOX compliance. Some people, they need a lot of help in this area. We offer a full outsourced SOX PMO, project management office, end to end, year after year, and we have clients we work with in this way. But some people, they have some resources inside their company, and they just need to be augmented at key points throughout the process each year. And we call that our co-sourcing model. Maybe it's just help with walkthroughs, SOX testing, some remediation, you name it. We can customize a program in a flexible way and work with you there. And then, as I mentioned, close optimization software. We're a full service provider of BlackLine, and we can help you to evaluate and implement that product if it's right for you. And then finally, here in the last box, special internal audit and SOX projects. So maybe you've got a new service line or service offering or product line. You've gone through an acquisition, or you've got some new accounting requirements that are creating a challenge for you. We can jump in and take over any one of those projects. So finally, just to summarize, here's what we've covered today. We've walked through the SOX requirements of 404A and B. We've drilled down on the SOX optimization equation and its related components, and we've discussed automation opportunities. And we've also summarized our SOX service offerings. If any of this has hit a nerve or you want to know more, just reach out to James or I, and we can talk you through that. Thank you very much for your time today.